Returning to the office is something that productive people only want to do if they do not have a quiet and comfortable work environment at home. But that's just my opinion. In this video, we're going to see how Nasdaq explains why the return to office movement is struggling.
Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mark Ein, Castle Systems Chairman, which is the nation's largest managed commercial real estate security provider.
That's interesting. They probably have tons and tons of data.
And they have been tracking America's return to work since early in the pandemic by scouring key card and mobile phone access data in 10 key cities. Castle has the hard data to share. Mark, certainly a key topic for all of us, especially those that are in a hybrid, sometimes the office, sometimes home environment. So is the office...
Hybrid is so weird. I do not understand how people can juggle between working from home and going into the office when you never know who's going to be at the office, which will then, of course, negate the point of going into the office in the first place.
Getting back to a semblance of normal.
Well, it depends on what your definition of normal is. First of all, thanks for having me. And as you said, we've been tracking this since the pandemic started.
To me, of course, working from home is the new normal.
The good news is that the office utilization is roughly double where it was in the beginning of the year. As you see there in the chart, it's now up to 44%.
That's unfortunate.
We were in the low 20s at the beginning of the year. So it's come a long way. But when you look at office utilization at 44% and you compare that to things like restaurants and airplanes and movie theaters and sporting events, which are pretty much back to normal, we still have a long way to go.
That's because no one wants to go back.
What trends have surprised you the most?
Well, you know, it's been interesting following.
This graph is really interesting. We see a huge drop off at the beginning of the pandemic. And if CEOs and executives and managers had their way, we would see a V-shaped chart here going all the way back up, which of course hasn't happened for a very good reason.
And there you see over the full time period, this really has been a series of fits and starts. I think the overall theme is that many business leaders would like their teams to be back in person. If
they are wrong,
not all the time, at least some of the time. They feel like the connective tissue that we all built over many years is fraying. People have left companies and joined companies and they've never met their colleagues in person.
What's wrong with that? I believe the connective tissue can be done online using communication tools. Email, of course, is not a good way to build bonds, but video conferencing and chat applications do a pretty good job
over a long time period. And they want people back. Until recently, because the economy's been so strong and the labor market's been so strong, it's been very tough for them to impose it, but they've tried at many different points. And then there's been pushback. I think what's interesting is going forward.
Nobody wants to spend an hour commuting each way to go into an office with a bunch of stinky people.
With the economy, with, you know, now headwinds as opposed to tailwinds, the labor market softening, I think you're going to see people, and frankly, as people experience coming back, they actually recognize the benefits of it. And again,
what benefits? Jesus Christ.
And there's not a one size fits all for every company. And it's not necessarily all the time, but I think people are starting to really recognize the importance of at least being together some of the time. And so we expect the 44% to continue to go up.
This is where I'm confused. He keeps saying how important it is and how there's connective tissues, but there is no explanation given as to why people need to meet up in person to achieve any of this.
So then you do think office occupancy rates will bounce back a little bit more in the fall?
Yeah, we think they're going to keep coming back. Traditionally,
I think people are going to be forced to go back if this ever actually happens.
Business leaders have sort of put stakes in the ground around calendar dates. So last year, there was a meaningful jump after Labor Day. There was going to be another one after New Year's. But every time people put a stake in the ground, a new variant comes and sort of stops the conviction for.
Every time this happens, people get more and more used to working from home and seeing the benefits of not having to go to the office.
For it, but Labor Day is another moment, a really good moment where people say, when you come back to fall, get ready, I want you back in the office. So we do expect another stair-step function above this, but not at the 100% level the way many other parts of life have returned.
That's right. I bet most businesses don't need any offices at all.
What does this mean for the future of work? In your opinion, is it feasible for business owners and operators and management teams to learn to adapt how to be in a hybrid environment?
Yeah, look, I think some element of hybrid is here to stay. And I think a lot of it, no matter what your point of view is a good thing. I don't think anyone's eager to return to the days of getting on an airplane across the country for an hour meeting when a Zoom would do. Now, sometimes actually getting on a plane and going seeing someone in person is really, really important for
Is it though?
Closing that deal or solidifying that relationship. But there were times people did that and it's not necessary. Or a big group call that used to be done by conference call, as we remember, now are being done by Zoom and people are used to it. So there's a really good component of all that. And I think that pertains to giving people some flexibility to work within their company, where they want and have more flexibility.
First off, having a meeting in person doesn't ever need to happen unless there is something physical involved, like if you're trying to demo a physical product.
But hybrid also means that there's a part of it where you're together in person. And even the ones that are saying we're remote primarily are also trying to figure out, maybe less frequently than someone who says hybrid means 3 days a week in and 2 days off. Even the ones that are full remote are saying quarterly or monthly, we need to get our teams together so you have that experience.
In my opinion, a quarterly or monthly meeting means meeting up 1 day out of 30 or 90. That hardly counts as hybrid, which is commonly understood to be, a few days a week.
And I think that's reasonable. I mean, for us, anecdotally, we are in at least 2 days a week, and it's nice to be with our teams, but then also have the flexibility at home, whether it's productivity or arranging childcare and so forth. So it seems like a happy meeting, but of course, that culture building, it's hard to put an actual price tag on that. So why did Castle develop the Back to Work Barometer, and how
Culture building can be done online as well.
does this help the commercial real estate industry?
Yeah, so it's interesting, as you mentioned in the introduction, we are the biggest provider of access control on a managed basis in the country. So we manage 10,000 different locations and millions of people use our systems. And so we had this database of millions of card swipes that we could compare after the pandemic to pre-pandemic. And originally we just shared this with some of our big customers and they really were interested in it. And we thought, there's probably interest in this on a much broader level. And we started publishing it, and it really has become the de facto metric for people using the office, and it's used in Wall Street research.
I'm actually really glad that this data exists and that Nasdaq and this company is sharing it with us. This way we get to see just how futile the movement to get people back into the office really is.
It's used by retailers, it's used by real estate firms. And so it's been nice to have something that people find of value and that helps them plan their business. As I mentioned, the commercial real estate industry uses this to see not just national trends, but local trends. Some ask us to do it on a micro level, which we can do. But then other businesses that rely on the urban ecosystems, especially restaurants, retailers, are also using it to see where occupancy is, to plan. We can actually provide this on a day.
I do feel sympathy for restaurants and other similar service industries that are based around having their locations near offices where people used to have to show up all the time and now don't.
Day of the week, they can plan the workforce. So it's become a really important tool that's permeated a lot of the ecosystem that surrounds the commercial real estate industry.
All right, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
The interview we just watched provided us with data that shows how many people are going back to the office since the pandemic has sort of calmed down, and how each variant that is discovered sets back the return to office date set by people who do not understand how to work remotely. Outside of the chart that we were shown, the talking points that are commonly parroted by executives and managers were repeated, of course, such as building a social fabric, closing the deal, team building, etc. Without providing any insight on how those objectives are actually accomplished by meeting in person, as opposed to using online solutions to do the exact same thing without incurring the burden of returning to the office. In my opinion, from a real estate perspective, return to office largely revolves around justifying existing investments and keeping service industries alive. To be fair, I like food a lot, and it does sadden me to see restaurants die because the office population has gone down. That being said, these opportunities still exist for restaurants that are located in the suburbs as well as near high-density residential areas. The service industry problems are largely a location one, and not to do with people being or not being at their office. Anyway, that's it for this video. Like and subscribe, and until next time, I'm out.